Have you noticed gas prices lately? Well, here's a story unfolding on the high seas that might just have something to do with it. The amount of Iranian crude oil just sitting on tankers, literally floating at sea, has hit a 2.5-year high. We're talking about a massive 52 million barrels of oil in what is called floating storage. To put that in perspective, that's enough to fuel over 2 million American homes for an entire year. So, why is all this oil just waiting around? The main reason points to a slowdown in demand from Iran's #1 customer, China. Even though Iran is pumping out oil and its exports are still strong, China just isn't buying as much as it used to. It's like a baker making a ton of bread, but their main customer suddenly decides they're on a low-carb diet. Let's break down these numbers because they're pretty staggering. According to the shipping intelligence firm CLER, this 52 million barrels is the highest we've seen since May 2023. Roughly half of this floating oil is hanging out near the coast of Malaysia, which is a key transit point for oil heading to Asia. What's really wild is how quickly this number has shot up. Just a month ago, the volume was about half of what it is now. And if you go back to January of this year, there were only about 5 to 10 million barrels in floating storage. That's a tenfold increase in just a few months. This situation is creating a fascinating dynamic in the global oil market. You have Iran, a major OPEC member, with a surplus of oil it needs to sell. Then you have China, the world's largest oil importer, putting the brakes on its purchases. This isn't happening in a vacuum. Chinese refiners are facing a few challenges. The country's economy isn't growing as fast as it once was, which naturally means less demand for fuel. On top of that, competition is fierce. Chinese refineries are being offered cheaper crude from other sources, including Russia, which has been redirecting its oil to Asia following Western sanctions. So, they have options, and they're choosing the most economical one. This buildup of Iranian oil is a bit of a paradox. On one hand, Iran's oil production has been surprisingly resilient. Despite international sanctions, they've managed to ramp up their output to the highest levels in 5 years. They've been very successful in finding buyers, primarily in China, by offering their crude at a discount and using a ghost fleet of tankers to move it discreetly. But now, it seems they might have pushed a little too hard, producing more than their primary market can absorb at the moment. So what does this mean for the rest of us? Well, a large amount of oil in storage can act as a buffer, potentially keeping a lid on global oil prices. When there's a surplus, prices tend to go down or at least stabilize. If this floating storage starts to get drawn down because demand picks back up, or if Iran decides to cut back on production, we could see prices move in the other direction. It's a delicate balancing act. The situation is also complicated by geopolitics. The relationship between Iran and the West, particularly the United States, is always a factor. Any changes in sanctions or diplomatic relations could instantly impact Iran's ability to sell its oil on the open market. For now, the focus remains on China. Will its demand for oil rebound? Will it continue to favor Russian crude over Iranian? The answers to these questions will determine how long these 52 million barrels of oil remain at sea. It is a complex puzzle with huge implications for the global economy and for the prices we all pay at the pump. This floating stockpile of Iranian oil is a clear signal that the energy landscape is constantly shifting. We'll be keeping a close eye on this story as it develops. What do you think will happen next? Let me know your thoughts in the comments below. Thanks for watching, and don't forget to like and subscribe for more deep dives into the stories shaping our world. See you next time.